Hello and very happy good morning to everyone. Welcome back to our channel. Today we are dealing with the latest updates from the GST Council meeting, the 55th GST Council meeting, which took place a few days back, which focused on significant changes related to credit notes under GST and some other changes related to IMS. So hello everyone, this is Sandeep Singh, your host, a retired IRS officer, Indian Revenue Service officer. And today in this video, we are going to explore the recent amendments concerning credit notes under GST as announced in the 55th GST Council meeting. And also we will be discussing the other key changes proposed by the 55th GST Council meeting related to IMS and the GST rules. So they proposed amendments in not only the Act but also in the rules. So let's see today in this video what exactly those rules, those amendments are which are proposed. So before we move forward, let's first understand what are credit notes in GST, what actually they are. So a credit note is a vital document that allows suppliers to rectify discrepancies in the original tax invoice. So what are the common reasons for issuing a credit notes? Why on earth the supplier issues a credit note? So let's discuss the scenarios under which a supplier issues the credit notes. So if the supplier mistakenly declares a higher taxable value in the tax invoice than the actual price of the goods or services, then they will issue a credit note for the difference. For an example, if an item is priced at 100 rupees and the invoice shows it at 150, then a credit note for rupees 50 will be issued by the supplier. Second scenario would be if the tax rate mentioned in the tax invoice is higher than the rates actually applicable on the goods and services, then the supplier will also issue a credit note. For an example, if the tax rate on an item is 12% GST but the invoice shows it at 18%, then the excess tax amount will be adjusted through the issuance of a credit note. Third, if the customer receives fewer goods or services than what was mentioned in the tax invoice, then the supplier will issue a credit note for the shortfall. Another scenario would be when a goods or services are of poor quality or unsatisfactory. So if the customer returns the goods or services to the supplier, a credit note will be issued accordingly for the full amount. So issuing credit note allows the supplier to reduce the tax liability to that output tax liability, provided the recipient correspondingly adjusts their input tax credit or ITC, or he reverses the ITC. So now let us discuss the significant amendments as proposed or introduced by the 55th GST Council meeting, which took place recently. The GST Council has made the following recommendations, which, if backed by a notification, will become the law. So first thing is the first amendment proposed by the GST Council in the 55th meeting is the amendment to Section 38 and Rule 60. It's a legal framework will be established for generating from GSTR 2B based on actions taken by the taxpayers in their invoice management system or IMS. Second is related to the credit notes, that is Section 34(2). It will be made mandatory for recipients. I again repeat, mandatory for recipients to reverse the input tax credit ITC related to a credit note so that the supplier can reduce that output tax liability. It was happening that the ITC was not reversed and the government was at a loss. So now it is mandatory for the recipient to reverse the ITC, then only supplier will get a output reduction. A new Rule 67B will be introduced, which specifies a procedure for adjusting a supplier's output tax liability when a credit note is issued. So this new rule is going to be implemented, issued by a notification. So in case of credit note issued by a supplier, the recipient is explicitly required to reverse the ITC attributable to a credit note to enable the supplier to reduce his outward tax liability. This means that for a supplier to adjust their tax liability, the recipient must first reverse the corresponding ITC in their ledgers. So how does this amendment impact the supplier? So for suppliers, the amendment means that reducing their output tax liability is now contingent upon the recipient's ITC reversal. This step is brought by the government so that it saves on the revenue. So for a recipient, it necessitates a prompt action to either accept or reject the credit note through the invoice management system or IMS. Please note here that in case of credit notes, the recipient does not have the option to keep it pending. He has to either reject it or accept it so that the output tax liability of the supplier is adjusted accordingly as per the reversal of the ITC. So if accepted, supplier output tax liability decreases, recipient GST 2B, and that reflects the adjustment. Now if rejected, if a recipient rejects the credit note, supplier's output tax liability increases in the next GSTR 3B, and recipient GSTR 2B reflects the rejection. So let us consider a practical example to understand how this actually happens. To illustrate the process, let's see what happens. So suppose there's an invoice, one original invoice has been issued by a supplier to the recipient, and the taxable value is rupees 1 lakh. So GST at the rate of 18% on that would be 18,000 rupees. And now subsequently, let's suppose that the supplier issues a credit note for an amount of 10,000 rupees. So on that, GST will be 1,800. So total credit note value should be 11,800. So now once this credit note is issued by the supplier to the recipient, now the recipient has to reverse the ITC of 1,800 in their IMS, in their returns. So unless this ITC of 1,800 is reversed by reversed by the recipient, supplier's output liability will not be changed. If this liability is credit note is accepted, then liability goes down. If rejected, then liability remains the same. So to summarize, the recent amendment emphasizes the importance of collaboration between the supplier and the recipient in managing their credit notes under GST. Both parties must ensure timely action. So thank you for watching. If you found this video useful, please like, share, and subscribe for more updates on GST and taxation. Feel free to leave your comments, any questions if you have, and I shall be very happy to come back to you to address your queries. Thank you so much. Stay happy, stay compliant, and see you in the next video. Bye-bye.